Countdown. Hey guys, what's up? It's me, Aaron Dishner from the Better Traders here on Coin Bureau Podcast. And joining me today is Matthew Siegel from VanEck. We're going to be talking about what he does at VanEck, the crypto side of VanEck, as well as the questions that a lot of us retail traders have in regards to what he's looking at, what data, what stats he's looking at, and how we can hopefully scrape some alpha from this guy to figure out how we can use information from VanEck to better ourselves in terms of flows and ETFs and all that good stuff. So, Matthew, welcome to the podcast. Go ahead and just give us a quick, um, well, it doesn't have to be quick. I mean, this is a podcast. You can take as long as you want. I mean, but go ahead and just tell us a little bit about yourself.
Hey, Aaron. Yeah, good to be with you. I've been at VanEck for 5 years. I run the digital assets research and manage one of our active funds, the on-chain economy ETF, ticker is NODE. Um, Started my career as a journalist covering finance, then moved to the buy side, worked for Kathy Wood for 5 years at AllianceBernstein, and then I was 10 years on the sell side, and that's when I found Bitcoin and got conviction that it was kind of the first killer app of this new cryptography technology that had recently been liberalized in the Clinton administration so that US companies could export it. And that kicked off a lot of innovation in cryptography. And Bitcoin was the first app. And hopefully, we're going to have a bunch more that will be successful as well.
Hmm. Nice. So right now, I mean, is this a green screen behind you, or is this the actual VanEck office that's behind you?
This is the actual VanEck office trading behind me.
Okay, so I don't believe you. So go ahead and just take a stapler and just no. No, it's all good. It's all good. So how like I understand a little bit of the journey, and you teased out that you worked with Kathy Wood for a while too. Can you tell me a little bit about that?
Yeah, I covered finance as a journalist at CNBC and Bloomberg for many years, and I got
Mm,
disillusioned with the news business for a lot of reasons that we can get into, but kind of figured out that fake news was a thing before there was a word for it.
mhm,
And I was envious of interviewing people with bigger balance sheets than me all the time. So I started to get my CFA, the Chartered Financial Analyst, and I was
mhm,
networking pretty aggressively, and ended up interviewing for an analyst position with Kathy, and she likes kind of the non-traditional background. So
mm,
spent 5 years with her, 4 years, excuse me, covering tech, kind of the Web 2. This is before Bitcoin existed, although we were
mm,
primed for it. Um, and ended up working in Tokyo, actually, where you are. When the earthquake and tsunami hit, we were big investors in the nuclear stock, so it was really front and center in kind of that
wow.
disruption. And
Mhm,
along the way, so left her and was on the sell side for 10 years.
mhm. Yeah, and it's funny because just before, you threw out "Yoroshiku onegaishimasu," which is basically I don't even know, is there an English equivalent for that? I don't really think so. Basically, like, looking forward to it, let's go. But really it's, "Thank you for taking care of me. Please take care of me." It's kind of a weird expression to translate, but, that's amazing though too, and you're here I mean, I was here as well in 2011. That was not a very fun time to be in Japan. For various reasons. But I'm glad that you at least were here and you were able to enjoy the culture and navigate navigate the country during that time too. It was a little bit wild, but I mean that's how it was around the world during that time too. The aftershocks from that earthquake went literally to. I remember people in California freaking out. The wave's coming. The wave's gonna take us out. This is gonna be it. It's like, guys, you realize how far away you are from Japan? It's like, okay, I'm not gonna say anything, but it's like, it's not about you. It's not. So anyway, um, so I'm curious to know. I actually have a couple of questions prepared, just because I'm more of a charts guy. I spend more time looking at indicators, more time looking at charts than I really don't spend a lot of time with fundamentals at all. Bitcoin is really the only coin where I've spent time looking at the fundamentals, which has given me confidence to time the tops as best I can and to time the bottom as best I can, so that way I'm selling and buying at the right spots. Um, but ETFs in general, you guys have so much more, I assume, data that's accessible to you, and you're also considering lots of other things, I imagine, instead of just purely price action. So I was wondering if you could just share a little bit. I mean, you obviously you can't give away your secrets unless you really want this video to hit 1 million views. I mean, that'd be amazing. But what do you primarily use at VanEck for your investment decisions when you're focusing on like the ETFs that you manage? Easy
Yeah,
question, I
first
know,
keep
right
in
out of the
mind
gate, so have fun.
keep in mind that, VanEck is a big diversified business. We have, more than $200 billion in assets, and a lot of that is in, passive products that either track a single asset, like the HODL ETF, or track a basket of assets, like our semiconductor ETF, and they either never rebalance or they rebalance systematically, and we let the clients make their own decisions, about whether to buy and sell, and what the investment product holds is very transparent, and those tend to be relatively low fee products, and they don't really need a portfolio manager. Those passive exposure comprises the majority of our assets.
Mm,
We also have this active business, across a number of asset classes, from multi-asset to natural resources to gold and gold mining, and digital assets. And in the case of digital assets, our active products are an early stage venture fund, a hedge fund, which can own tokens, or it can own equities, or it can own nothing if we're not bullish, and then an active ETF node, which is a mix of crypto and traditional securities. And so when you're diversified like that, you have a bunch of portfolio managers. Like, everyone kind of has their own views. From
mm,
management lets each PM kind of execute their own views based on their determination of risk and reward. And so, like, there is no one answer, and that having many
mm,
legs to the stool is what helps us be in business for 70 years, right? And even
yeah,
now, people are debating, like, internally on the morning meeting, are we buying Bitcoin or selling Bitcoin right now? And some people are doing one thing, and some people are doing another. So,
wow.
it's hard to generalize. But I will tell you that we have tried to put some structure around how we think about Bitcoin specifically,
Mm,
and we think about it through three primary lenses. The first is what's going on in global liquidity.
mm,
And that's very hard to predict. It's like predicting the DXY index or the
hmm,
10-year yield. Like, ask Warren Buffett to do that. He will say pass. So it's really hard to predict that. But sometimes you can see that that variable, global liquidity, is driving a certain asset more or less than it did in
mhm,
the past. So global liquidity. The second is the ecosystem leverage. So, unique to the crypto market, specifically Bitcoin, there's a futures markets, there's options, there are other like derivative exposure, and you can see kind of how much debt has accumulated in the space and what people are paying for that
mm,
funding. And that tends to be kind of a contrarian indicator that when risk appetite is really high and the derivatives market are frothy and people are paying up for call options, and uh, you typically want to maybe take some profits when that's happening.
mm,
And right now, that's definitely not happening, right? So on that ecosystem leverage lens, Bitcoin still looks pretty attractive because there's a lot of bearishness in the space by our read of these derivatives markets. And then the third is on chain. What's happening on chain?
mm,
And I would say the 4-year cycle is a large variable in what happens on chain, and that's probably what keeps us from being maybe more bullish across the firm, although some of us are bullish. So, global
mm.
liquidity, ecosystem leverage, and then the on-chain economy. And I think right now the 4-year cycle is dominating that on-chain economy because activity is pretty weak.
That's really interesting. Man, I would just love to get a little free pass, just sit in on one of these meetings with all these people with their own opinions about what's happening because as you can tell, my background in my office is bustling with inanimate objects that don't tell me what to do, and I'm literally the one that's making all my content, so I'm using charts. And I personally don't enjoy reading other people's content, reading other people's analysis, personally, but I mean, that's other creators for YouTube because it clouds my judgment. But it'd be so different to be in a room with a bunch of people that have their own training, their own tutelage, their own ideas, and they're all coming together to create that unified vision of, okay, this is what we're doing. This is why we're doing it. This is my base case. This is all that. Be so wild. So talking about those three different aspects, it's really interesting that you bring those up, especially the fact that you guys believe that the 4-year cycle is still legit, still real, where that's, I wouldn't say it's hotly debated, but I can tell you for my videos, for the Coin Bureau trading videos, there are always people in the comment section that are saying like, nah, man, 4-year cycle is dead. Um, and yet here we have you saying, "No, pretty much it's lining up with what's happened in the past." Would you mind just getting into a little bit of what you're seeing as to why you believe the 4-year cycle is still alive and well?
Yeah. Uh, First is that the timing of the market peak corresponded pretty much exactly with what the 4-year cycle would have predicted. We fell 50% pretty much, peak to trough. If you adjust for the volatility, the changing volatility of Bitcoin, so
Mhm.
4 years ago, Bitcoin fell roughly 80%,
Yeah.
but the volatility at the time was twice as high as
Yeah,
it
yeah,
is
yeah.
now. So if you volatility adjust it, we kind of have had this, correction that's already been as large as the last one. Um, the second reason is I don't think that the 4-year cycle was accidental. I think Satoshi designed it in with the presidential calendar in mind,
Mm,
and the midterm year tends to be a weaker year,
mm,
especially this year, where I think the odds of the Democrats sweeping both the House and the Senate are relatively high and possibly rising.
mhm,
That will give the market a reason to hyperventilate about some of the changes in policies that could result from that. And we're still a
mm.
little bit far away from the election, where we've got this war so there's near-term things to focus on.
Yeah.
Market really hasn't turned its attention to what DC is gonna do next
Mm,
January, which is when, um, the House and Senate would
mhm.
turn over. So,
Yeah.
I could be wrong, like, things change, rhyme, not repeat, all that caveats
Yeah,
aside,
yeah.
but, for me, there's some reasons to think that this year is more of a trading range type of
Mm,
year. Hopefully not a big breakdown year. We kinda had that into the at the to the 60K,
mhm.
but more of a trading range year.
Interesting. So I see a lot of people always talking about ETF inflows and outflows being this big leading indicator or a great way to see what institutional money is doing. And this is a perfect time to ask you, who's literally representing an institution, how influential are these ETF inflow outflow signals? And does it matter? Like, are these like taking into account every single ETF that's like it just seems like this wishful thinking scenario where it's like, okay, well, let's just use this one thing that kind of fits my Goldilocks scenario, and I'm going to use this all the time because this works perfectly. Again, I'm mostly a charts guy. I'm not looking at fundamentals, but is there any truth to that? Like, do ETF inflows, outflows actually push the market in one direction or another, or are they basically just like us in retail, just kind of figuring things out as they go?
Sure, yeah. Well, I mean, when you're trying to make an investment decision and you're looking at a chart or some data set to help inform your view, you have to decide whether that data set or chart upon which you're basing your view is a leading indicator. Does it predict the
Yeah.
movement? Does it come in advance of the movement of some other price series? Is it coincident? Does it happen at the same time, or is it lagging? So the unemployment rate is a famous example of a lagging indicator. By the time the unemployment rate is rising, the Fed should have already been raising rates because jobless claims are a better leading indicator of the labor market, right? So ETF flows are a great coincident indicator of
Mm,
sentiment and price action for Bitcoin. And since the ETFs launched, the 3 to 4 p.m. Eastern hour has become the most liquid part of the Bitcoin day. That's new. So the price formation is now happening via these ETFs, price discovery, I should say. That's the
mm,
most liquid part of the market, and definitely matters for the price. Is just I'd call it a coincident indicator, not a
mm,
leading indicator.
Okay, okay, okay. Fair enough. And do you guys pay attention to or take into account dominance changes? That's one of the big things that I look at after I look at the price of Bitcoin and Ethereum, do my analysis. The next thing I look at is stablecoin dominance, Bitcoin dominance, others dominance to help me figure out how money could be shifting or where things could be leading next in crypto. Do you guys take that into account as well?
We do. Uh, I think that when Bitcoin dominance has been as high and as elevated for this long, then you have to start asking questions about what is the structural case for some of these altcoins. Is it wise to be grouping them in one category? Do they actually share similar characteristics that are investable? And we pivoted away from the alts quite a bit after the election. A lot of them doubled without any increase in usage. And meanwhile, the deregulation of the Trump administration made things easier for public companies that want to deal in crypto. They
Mm,
didn't really make it easier for the altcoin projects themselves, many of which still plagued by lack of disclosure. So I'd say, poor corporate governance, high
mm,
inflation, and increasing competition from the corp chains. So we'll have some research out shortly. The year of the corp chain, 2026, 10 different crypto companies that have banking charters. These
mm,
semi-permission chains, are kind of achieving some escape velocity. So I'm
yeah.
not too invested in alts right now in my fund. I'm very underweight. Um, if clarity passes or if some things change and I get more bullish, I'll probably pay more attention maybe to some of these dominance charts. But they're pretty much one way at the moment.
Yeah, it's been so strange. I mean, looking at Bitcoin dominance over the years and having it drop so low in 2022 and 2023 down to like 40 something percent, shooting up to like 68% maybe back in was it January, December last year. And it's still holding. I'm looking at this thing going, wow, I think so many people have been badly burned. It's like that scene from Austin Powers where Fez is still alive after being badly burned over and over. Um, but it seems like people really have given up on alts, yet there's still so much interest, particularly with like, the regular ones like Ethereum, Solana, XRP. Do you at VanEck, do you guys see those being like a realistic an ETF, I guess, would you say it's a vehicle or instrument going down the road of those alts, or is it really driven by retail demand, the clients that you guys are serving?
Right now, the altcoin demand is still largely retail and family
Mm,
office, I would say. We have been less aggressive than some of our competitors in bringing the single token ETF to market here in the US. We have Bitcoin, Ethereum, Solana, Avalanche, and we have a
okay.
filing for BNB, Binance.
Mm,
Uh, but we're have been more cautious in that space. We just don't we haven't gotten a ton of demand,
mm,
and we wanna see some more sustainable fundamentals. Uh,
yeah.
before, bringing kind of the single token product, not getting, it's advisors, financial advisors not really into it.
Mm,
Some of the market share gains from the open source tokens have kind of plateaued. I think the data would
mm,
say that, right? Going back to my corp chain
mm.
argument. So, we're totally willing to change my mind when the facts change. But for now, at least on the active side of the business, we're pretty underweight these alts.
Okay. So you're saying there's a chance of a fart coin ETF at VanEck. I mean, let's be real. Hot air rises. Am I right? So,
We have an index. We have a meme coin index, right? We own an indexing business called Market Vectors, and like we're happy to license you that index, and you can make the ETF. But I don't think
mm.
fart coins in our future.
Oh, come on. You're missing out. That's the future of meme coins were such a mess, such a disaster. Now, before the call, you had mentioned, speaking of ETFs, and you mentioned HODL, which is on your cap. You also mentioned the Node ETF, which has been performing really well, way better than Bitcoin. Could you explain a little bit about what that is? If I can actually get access to it, how can I get access to do it or to invest in it, all that good stuff?
Sure. So the VanEck on-chain economy ETF, ticker is Node, is a way to get diversified exposure to the entire digital assets value chain, specifically through public companies. So any company that has a strategy to either make money or, importantly, to save money from the adoption of Bitcoin, blockchain, or digital assets is in our universe. And that actually, when you take that wide net where the company doesn't have to have it be a pure play, they don't have to have more than the majority of their business exposed to digital assets, you actually end up with a lot of market cap across every sector. And then combined with a direct allocation to crypto, so we can own up to 25% in crypto via ETFs like our Bitcoin ETF. Uh, you can kind of mute the volatility of this very volatile sector,
Mm,
and we've been able to do this with reasonable performance. So up about 40%, and over the same time period, Bitcoin is down 30% by
mm.
focusing on the stocks that actually can make money or save money from this technology. Um, yeah, that's the story.
That's awesome. Congrats. That's a big accomplishment given the fact that things haven't necessarily been super green and rosy over in crypto land. And speaking of, we touched on a lot of different things, touched on, institutional sentiment, I guess you could say, and how you guys go about, making your thesis for investment, for your cycle, all that good stuff. Do you think, does your team think that we've actually bottomed out for Bitcoin at 60K? Or do you guys think that we have some more, we're basically going to be going lower? What do you guys say?
The way I'll answer that is by talking about the exposures in the fund that I control, which is that
Mm,
Node fund, because every
mm.
PM kind of has their own view. But
Yeah, of course.
in Node, we were buyers in that first dip to 60. So,
Mm,
this is a diversified fund with relatively small position sizes, and we have some very low beta stuff, even like electric utilities that are selling electricity to Bitcoin miners. They are in our universe. So when
mm,
Bitcoin has this extreme, price down movement, we've got some things in our portfolio that held up pretty well, and we can sell those and buy, whether it's Bitcoin miners or Bitcoin directly via ETF or exchanges like Coinbase. So we did make that move like a slug into kind of high beta from low beta at 60, and that has turned up the volatility on the fund. We stuck with it during the war, so we're doing okay in this bounce. I'm good. I would wait for a lower level before adding further personally
mm,
within the fund. Um, because like I said, I still give some respect to this 4-year cycle, and I don't think the market's paid
Mm,
attention to the election. But Bitcoin's so volatile, we could rally into the low 80s or even beyond that before we might have any type of retest. So just in general, we like dollar cost averaging. We like taking it slow with this asset class, not doing everything at once, unless you see like real extreme market behavior, and we don't have that at the moment. So I would describe myself as balanced, but a bit on the bullish side tactically.
mm. Interesting. Okay. Well, I mean, we'll see. I got one more question for you because this is something that's been bugging me a lot. Sell in May and walk away. If you look at price action and performance, this adage works well some years and some years it doesn't, right? But is there any real institutional truth to this? Because I feel like this might be an outdated saying from like 1993, where like mom and dad prop shops, like prop trading firms and stuff, they would actually just go on holidays, where I feel like no one goes on vacation anymore. But is there any truth to that statement now in 2026? Or is that something that I should just kind of like forget about and just be like, okay, whatever. That's just a myth.
I would rephrase it that whatever the trend is uh, heading into May, it will likely remain that way through the summer. So
Oh,
if the
okay.
markets are up year to date, into the summer months, then we probably stay elevated. And the same thing is true if the markets are down. You probably find it's tougher to reverse trend in the summer
Mm,
because a lot of the decision makers are taking Fridays off or what have you, and in Europe hardly working at all, right? So,
yeah.
and then Europe comes back to work in September, and you get the first earnings reports from the summer, and then people wake up to what the reality is going to be for the rest of the year. So, I don't, I
Mhm,
wouldn't. That's the way I would assume it is. Whatever the trend is in May,
mhm,
it'll continue that way through the summer.
mm. Awesome. I really appreciate your time today, Matthew. Do you have any handles where people can follow you or get more information from you on what you're doing?
Sure. Please follow VanEck _US on X, or myself, Matthew _Siegel on X is the best way to stay up to date with charts and analysis.
Awesome. Thanks again for your time. And you guys, thanks for watching. If you like more videos or if you want more videos like this, let us know in the comment section down below. Until the next time, you know what to do. Stay awesome and stay in the green. Peace.